Hey everyone, welcome back to Research Investment. I'm Simo, your equity research analyst, and today we're doing a refreshed close look on SoFi Technologies with an updated perspective as of October 15th, 2025. In the past week, the narrative around SoFi has shifted from a sharp pullback to a period of tense consolidation. After retreating from highs near $30, the stock has been building a base around the $28 mark, creating a battleground between bulls and bears. So, what's really happening under the surface? Is this consolidation the calm before a storm of buying, or is it a precarious pause? More importantly, is the company's ambitious multi-pronged growth strategy firing on all cylinders? And what does this all mean for my price target? Let's break it all down in greater detail. Let's begin with the recent stock performance. As of today's session, SoFi is trading around $28.50, giving it a market capitalization just over $34 billion. Trading volume has remained impressively robust, consistently averaging over 75 million shares on a daily basis. This high level of activity indicates that both retail and institutional investors are actively engaged, debating the stock's next major move. On a year-to-date basis, the stock remains a top-tier performer in the financial sector, boasting a gain of nearly 100%. Zooming out, the 3-year return is a staggering 460%, cementing its status as a key protagonist in the long-term fintech growth story, even as it navigates short-term market turbulence. Now for a look at the financial foundation and the latest earnings report. The company's second quarter results, released back in late July, painted a picture of rapid expansion. Revenues came in at $519 million, marking a powerful 43% year-over-year increase. While this figure fell short of the more aggressive street consensus of $800 million, which was partly due to a slight moderation in personal loan originations amid a higher interest rate environment, the bottom line told a different story. Earnings per share of 8 cents comfortably beat expectations. Critically, net margins expanded to 18.4%. This margin improvement is a crucial signal that SoFi is achieving greater operational leverage and is firmly on the path to sustained, scalable profitability. The return on equity of 4.44% highlights that the company is still in a heavy investment phase, strategically deploying capital into its new growth engines. Looking ahead, SoFi confidently raised its full-year EPS guidance to approximately 31 cents, signaling management's strong belief in their back half performance. So what are the key growth catalysts propelling this optimism? There are 3 main pillars. First is the aggressive expansion into options trading. The September launch of commission-free Level 1 options, which allows users to execute covered calls and cash-secured puts, was a direct shot across the bow at competitors like Robinhood. SoFi's strategy is to leverage its all-in-one app advantage, integrating trading seamlessly with banking, lending, and other services. The roadmap includes adding IRA options and the highly popular zero-day expiration contracts, which could dramatically increase trading volume and create a stickier, more engaged user base. The second pillar is SoFi's strategic re-entry into blockchain and cryptocurrency. The partnership with Lightspark to launch a blockchain-based international remittance service, starting with the massive US to Mexico corridor, is a brilliant move. This taps into a multi-$100 billion global market that has long been plagued by high fees and slow settlement times. By using blockchain, SoFi can offer a cheaper, faster, and more transparent solution, building deep trust with a new demographic of users. This initiative, combined with its broader crypto offerings, provides a powerful and diversified new revenue stream that is less correlated with traditional lending cycles. And third, and perhaps most unique, are the private market funds. By launching investment funds that provide access to pre-IPO titans like OpenAI and SpaceX for as little as a $10 investment, SoFi is radically democratizing venture capital. This isn't just a niche product. It's a powerful customer acquisition tool and a key differentiator that very few competitors can match. It creates a significant moat, attracting an aspirational and potentially high-value client base that may then adopt SoFi's entire suite of financial products. Turning to insider activity and broader investor sentiment. The recent sale of shares by a SoFi director was widely noted, but it appears to be a standard case of diversification and profit-taking. The fact that she retains a substantial position of nearly 290,000 shares underscores a continued deep-seated confidence in the company's future. Meanwhile, Wall Street sentiment is clearly on an upward trend. While a few months ago analysts were mixed, consensus price targets have now coalesced firmly around the $29 level, with some bullish analysts pushing their targets into the mid-30s, citing the successful launch of these new growth initiatives. From a technical analysis perspective, the chart is constructive. The stock is carving out a solid consolidation pattern right above the key $28 psychological level. This price action suggests that the recent selling pressure has been absorbed and a new floor of support is being established. The 50-day moving average near 25.40 offers a significant safety net, while the long-term 200-day moving average sits far below at 18.40, indicating a strong underlying uptrend remains intact. Momentum indicators like the RSI have reset from oversold conditions and are now neutral, giving the stock plenty of room to run on the next catalyst. Of course, we must consider the valuation and risks. Trading at a trailing PE ratio of around 58 and a PEG ratio near 3.3, the market is pricing in a great deal of future success. This valuation demands near flawless execution. The risks are real and multifaceted. Potential regulatory hurdles from the SEC's ongoing scrutiny of digital assets, fierce competition from both nimble fintech startups and legacy banks with deep pockets, and the overarching macroeconomic risk that persistent inflation could dampen consumer demand for loans. So, what is my price target and outlook? Considering all these factors, I am reaffirming my conviction that if SoFi successfully executes its expansion into options, blockchain remittance, and private markets, the stock has a clear pathway to double from its current valuation. I see a price target of $50 as achievable within a 12 to 24 month timeframe. The company's diversified financial supermarket model is creating a powerful flywheel effect, increasing customer lifetime value and driving higher revenue per user. My final thoughts are these. For growth-oriented investors with a tolerance for volatility, SoFi offers a rare blend of disruptive innovation, a strengthening financial position, and clear leadership in several emerging fintech verticals. While the stock's journey will undoubtedly have its ups and downs, the fundamental momentum and the strategic product roadmap underpin a compelling and bullish long-term thesis. Thanks for watching this analysis on SoFi Technologies. If this analysis provided you with valuable insights, please show your support by hitting the like button, subscribing to the channel, and leaving a comment with your own thoughts on SoFi's future. The entire market is now waiting for the third quarter earnings call on October 28th, which will be a pivotal moment to see if this momentum is accelerating. Stay tuned for my post-earnings analysis.